Hey guys, Toby Mathis here, and today I'm joined by John Anderson, another great attorney, and we're going to be talking about the 5 worst states to live in if you pass away. And just to make sure that we're getting our facts straight, John, what are we really going to be focusing on today?
So the main focus is going to be where we have the government who wants to take a piece of your assets after you pass away through the form of a tax, an estate tax in this situation. Uh, Most people, when they hear about the estate tax, they hear about the federal estate tax, which right now, if your net worth is under about 14 million for an individual or 28 million for a married couple, you don't actually have to pay any estate taxes. But there are several states
Federally, right?
federally, right? But there's a few states in the country where the state itself also has an estate tax where they want to take another piece. And the exemption, the amount that your net worth has to be over in order to have to pay the tax, can be a lot lower. The lowest one being $1 million. If you've got over $1 million, you got to pay taxes, or at least the government wants a piece of it.
Okay, so let's set the table. Let's say their estate is worth 5 million bucks, and they're thinking, I'm well below the federal exclusion. I'm not worried. And by the way, the federal rate when you go above the 14 million, like what are we talking about? Is it 10%, 20%, 30%, 40%? What is it?
40%.
40%. So it's like, boom, hits you.
Yep.
So you're thinking you're out of the clear, and you live in one of these states. Maybe the worst one you just said was a million. We'll get into which state that is. And the state taxes you. So you think you don't have a tax. You pass away, your heirs take the estate, and they're thinking, okay, I just inherited the farm. And now they may have to sell the farm to pay a tax because there's a state estate tax. And are these big taxes too, or are these as big as the federal?
Some of them can be. Yeah, they can be a considerable amount of money. And they are very, how is that, tricky in some circumstances, where even if you don't live in the state, they still try to get you.
Because the assets in the estate, right?
Yep.
Yeah. So for those of you guys who own properties in multiple states, this is why we're always trying to put you in an entity structure, so that because otherwise you own property in 3 states, you're probating in 3 states, you're subject to 3 states tax regimes, you get all sorts of good stuff that we try to avoid, but that's a topic for another day. So let's dive into the top five. I guess we should call them the bottom five, but these are the states where if you live in them, you need to talk to somebody, especially if you have a sizable estate. So what's number five?
So number five, I would say, would be Rhode Island.
Rhode Island. Why?
So one, they have a fairly low exemption amount. It's about $1.8 million. But yeah, you don't have to have a lot to have to pay taxes there, the estate tax. The other thing that Rhode Island does, that just a couple of other states, so there's 3 states that include lifetime gifts as part of that calculation as well.
All right, let's break that down. So you live in Rhode Island. Let's say your estate's worth $5 million, and you start giving it to your kids, and you think, "Aha! I'll get it out of my name. I'll use the exclusion to my advantage. If I give $1.8 million of gifts, am I now in a situation where I'm paying state estate taxes to gift additional assets?"
So you're paying the tax after you pass away. So they take the gifts that you made during your lifetime and they add that to your estate that you had when you died. And then that estate tax is calculated based off of both of those values.
What if I gave more than the 1.8? Would I incur a tax?
Not until you passed away.
Not until you pass away. Then they're going to stay. All right, that extra amount you gave 2.5 million, so there's 700,000 that you exceeded. Then they hit you on that.
Correct.
How big is it?
So the rate goes up to 16%.
Oof. So again, let's keep it real. You pass away, you got a house. Let's say your house is worth $500,000 and you got business, and the business value is, let's say it's $4.5 million. So they added up, you're at $5 million. You're going to have to come up with, gosh, let me see if I can do some math here. You could be looking at doing 5 million minus 1.8, 3.2 times 16 or whatever it is. Like it's not that clean. There's graduated rates, but you could be looking at hundreds of thousands of dollars in tax. Is that fair?
Easily. Yeah.
Oof. I don't like that much.
Yeah. And it's based off of your net worth. So it doesn't matter if it's liquid or not. It doesn't matter if it's income or not. You got to pay the tax.
You might have to sell the house. You might have to sell the business. And hopefully, you get the step up in basis, thank God. So we don't get double taxed, but still that could be a little sneaky surprise. Everybody's thinking, I didn't have a huge estate. Why are they doing this to me? I'm just trying to pass this on. So it makes the last season of Yellowstone particularly relevant when we start talking about estate tax. If anybody's ever watched that, that was the Achilles heel of Yellowstone, right? Is John passes and there's a massive estate tax.
Yeah. It was in Downton Abbey too.
Yeah. Oh, really? I didn't see that one.
That was a part of Downton Abbey, was the estate tax.
Oh, so sneaky. They get you while you're alive and then they wait. And then when you pass. Now, there's other types of taxes. There's inheritance taxes and things like that. Are you using those in your calculations?
Yeah, there's only a handful of states that have inheritance taxes. And in fact, one of the states that has an inheritance tax, they're on my list. So we can talk about one of those.
All right. So Rhode Island, if you're in Rhode Island, talk to an estate planning attorney. Maybe there's some things you could do to get it out of Rhode Island, or maybe you can move. That's why everybody's leaving. They're like, I don't want to pay this tax. It's too expensive. What's number 4? Since we did 5, let's do number 4.
Yeah. So number 4, I would say, is New York.
Oh, wow.
New York actually has a fairly high exemption amount. It's 7.16 million. Tax rate is 16%. So why are they worse than Rhode Island? Well, in New York, if you're over the exemption amount by, it's 105% of it, they actually take away the exemption. So you don't even get the exemption if you're over the amount. You have to pay a full 16% on all of it.
So if your exemption 7 million and you're, what would that be, like if you're 8 million or whatever, 105%. So that's probably like about 7.5, right? It's probably gonna be around there. You lose the exemption, you're just like, psych.
Yeah, you have to pay the full amount on all of it. Versus that's the only state that does that. Everywhere else, you at least can deduct the exemption from your amount.
So you lose the exemption. So if you're at 8 million, you're going to get hit. What is the tax rate? Like
16%.
So if I'm at 8 million, I'm going to be paying about $1 million in tax.
Yeah.
And if I was at 7 million, I wouldn't pay anything.
Pretty much.
Gotta love New York. All right.
What's 8 million? Like an apartment in Manhattan or something?
1 bedroom. I don't know. That's probably get 2 bedrooms. I'm sorry to the New Yorkers. No, I know that's a tough state. That I always look at New York and California and go, you guys are vying for the title of the most aggravating for your citizens, but people love it there. I will say that they love New York. So you're paying because you get good delis down the street, I guess. I don't know. But all right, so that's New York. What's number 3? Let's go to number 3.
Number 3 would be Oregon. So this is the state that has the lowest exemption amount. It has an exemption of $1 million.
$1 million. So does that include your life insurance and things like that?
It does. If you're a resident of the state, it does include your life insurance.
And how much is it? So
the tax rate is 16%.
So I hate to just keep repeating myself, but let's just say you got a $2 million estate and your attorney's like, don't worry about the estate tax, da, 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 da. So you don't. And let's say that you pass away. maybe your house, a few assets, and you had some life insurance, and you thought you were doing a real solid to your kids, and now they're looking around going, wait a second, Oregon wants its piece. So Oregon's going to get anything above the exemption, right? You don't lose the exemption, but you get whatever above it. So $2 million estate, you might be looking at a,
About $160,000.
oh my God. Like, again, I just want that to sink in.
Yeah.
160, like, ay.
Yeah. On $2 million worth of assets. That's not very much.
Yeah. And if you had a $2 million farm or something, or, whatever it is, a house in Portland, because God knows they're expensive, right? And you pass that on, they're going to be asking for that cash, right? So you're going to have to refi it or find some means. Hopefully you have some life insurance so you have some liquidity, but ouch. All right. So Oregon's bad. That kind of stinks for everybody up in Oregon. That's why everybody lives on the other side of the Columbia River, right? They're going to go to Vancouver and they're going to say, I'm going to live there. Or should they? All right. We'll get there in a second. All right. So let's go number 2. It's the Pacific Northwest. They're kind of all losing their minds up there. Don't worry. I lived there for 20 something years in Seattle, so I can say it. But who's number 2?
So number 2 would be Maryland. So Maryland actually has a higher exemption. It's at $5 million. Tax rate is at 16%. But Maryland also has an inheritance tax of 10%.
So the person who inherits has to pay tax as well.
So the estate tax is paid based off of the person who passed away and the assets that they had. An inheritance tax is based off of where the person who's receiving it lives. And they have to pay whatever the amount that they're inheriting. They have to pay the tax on that. So if you live in Maryland and your heirs are in Maryland as well, then your tax rate is actually 26%.
Oh, wow. That's not good.
No. So most of the other states we look at, 16% is pretty standard. But yeah, they have the 16%, but they also have the inheritance tax on top of that.
So if you're in Maryland, you could be, and you're inheriting in Maryland. Are there exemptions like for kids and things like that in Maryland?
Not in Maryland. Other states that have an inheritance tax, there are exemptions. It also can depend on how close the relationship is to the person who passed away as to what the tax rate is. So like Pennsylvania, if it's your kids, they pay a certain tax rate. If it's your brother, they pay a different tax rate. If it's your nieces and nephews, they pay a different tax rate.
But the state wants a little piece. They're like, hey, you inherited it here, pay up a little.
So this one you got to watch out. It's not based off of where you live. It's based off of where your beneficiaries live, where your heirs are going to live.
So give me an example of if the beneficiary lives in Nevada, for example, and you passed away and the decedent lived in Maryland, is it a different rate or do they get hit with it?
No, so you would just pay the estate tax. But if you lived in Nevada and your heirs, your kids lived in Maryland, then they would have to pay the tax in Maryland.
So you got to be careful about who's inheriting. Wow. Could you avoid that with a trust?
You could.
Yep. So we'll get there, guys. There are some workarounds. Charity, living trust, irrevocable trust, things like that. There are some solutions, but you better talk to somebody who knows what they're talking about. All right, we're getting to the drum roll because we need number 1. What's the worst state to die in from an estate tax?
Worst state, and it just took over number 1 starting July 1st, is Washington.
Washington State, not Washington, D.C., right?
Yeah, Washington State.
Why?
Their exemption amount is $3 million. It's not the worst, but the tax rate is 35%.
Whoa, 35%?
Yeah, 35%. And so if you were above the federal estate tax and you were living in Washington, you would be paying 75% of your assets.
You get no deduction for any of this?
No.
Holy cow.
So the way, and Washington is kind of tricky. Or Washington and Oregon can be, you don't even have to live in the state and you could still owe taxes there
Is it by owning the asset there?
by owning property in the state. Yeah. And the way they calculate it, you may think, oh, I've got maybe, let's use an example of you got a $2 million property in Washington. That's, it's your summer home or something. Well, you're under the 3 million exemption, so you shouldn't have to pay taxes, right? No, that's not actually how they work. Let's say you've got $10 million worth of assets in your home state.
Oh,
So the way they calculate it is they just because you have property in Washington, you have to take the total value of all your assets, calculate what the estate tax is, and then you can use a fractional to determine how much you owe Washington. So if we did the 10 million outside of the state and the 2 million in Washington, you have $12 million estate. You take out the $3 million exemption. So you have a $9 million and then we apply a 35% tax to that. That's a $3.15 million tax. And then you get to apply the fraction, right? So because you only had 1/5 or 1/6 of your assets in Washington, so then you only have to pay 1/6 of that in taxes. So even though you only had a $2 million asset in Washington, you're going to owe $525,000 in taxes to the state.
I just did the math on my calculator. 525,000. I came up same thing as you. So just because you happen to own a property up there and you have a sizable stake.
Yep. Even though you may not even live in Washington.
And the property you just said was worth $2 million.
Yeah, you would think, well, I'm under the exemption. I shouldn't have to pay.
$500,000 you're going to owe. Holy cow. So if you're thinking of buying a property in Washington as your vacation property, rent it.
Well, there is ways of getting around it fairly easy. If you own it in an entity, you've converted it from real property to intangible property, and then you can get around it.
Yeah, a lot of these things, guys, like for the folks that are, I don't want to say foreigners, but people that live outside, that are citizens outside the United States and maybe residents here or non-residents, but they own property here. Like maybe you have some relatives that live out of the country that are citizens of another country and they own some assets. The exemptions are really low federally. It's like 70,000, right? So but there's some easy workarounds so they don't get hit with it. This is a similar situation where this seems like a tax for the unwary because the workarounds would be pretty simple. Putting it in an LLC, using a land trust, getting it to some other vehicle. Would that get you away from this situation?
If you're in a state that doesn't have an estate tax and you have property in a state that does, yeah, that's usually the workaround, is to have some type of an entity that owns that asset in that state so that it's not tangible to the state. It converts it to an intangible asset where you own kind of the interest in the company, not the property itself.
Wow. Well, those are the worst 5 states to live in when you pass. Thank you, John, for sharing that with us. And speaking of sharing, like and subscribe if you like this type of information. If you know anybody in those states, go ahead and share it. And if you live in a state that you think should have made the top 5, put it down in the comments as to why your state is so horrible and what they're doing. I know there's a few that are probably right on the fringes, and we're just grabbing the top 5, in our opinion, but maybe there's worse. So please, if you think your state has some ridiculous laws, share it. And let's just make some awareness so nobody's caught unaware. And when they're caught unaware, usually that's painful and expensive, not for you, but for your heirs. So we want to make sure that we get as much knowledge out there as humanly possible. Maybe it's your parents, maybe it's a friend, maybe it's a sibling or whatever. Share this with them if you can. Save them a little bit of pain and suffering. And thanks again.